Hey, my friends, it's Nate Short, and welcome to a special episode of Run Your Business Like a Business, a podcast where we explore better ways of how to run your real estate business more like a real business and at the same time create better life balance. Hey, I'm your host, Nate Short, and I'm honored to be your high performance coach today with this episode. And I've spent the last 20 years working as a high-performing realtor while at the same time coaching, training, managing, writing, and studying human psychology and sales at literally the top levels in the real estate brokerage industry. And I created RYBLAB.com, which is an acronym for Run Your Business Like a Business, to really explore the topics of sales systems, accountability, motivation, focus, productivity, confidence, and more. And my goal, inspired by my own personal journey, is to help real estate agents create dynamic, fun, profitable real estate businesses while at the same time having amazing life balance, energy, and passion for living your best life. And so if that's what you're looking for, that is what we're doing today. And just as a reminder, if you want to go to another level of development, both personally and professionally, be sure to check out my coaching programs at RYBLAB.com, where we believe that coaching is a key part of every agent's life when it comes to getting more sales, being more profitable, having more fun, and most importantly, while having life outside real estate as well. Because it's time to level up, my friend. It's time to take your year back. It's time to find that focus and that confidence and that vibrancy and that vibe again. And I'd love to be your coach into fuller levels of high performance. Now, without further ado, let's jump into today's episode. Okay, well, super excited for today's show where we have my guest Shahar Plinner, who is the co-founder and CEO of Formations Corporation. Shahar is a tax and accounting expert. He's the founder and former CEO of GPL, a tax accounting firm where he served thousands of business owners and perfected the SCorp management process. Now, if you're not familiar with Formations, it is a fintech startup that offers realtors a complete financial management solution to maximize the financial potential of their business and improve their financial well-being, which of course is what we're all about here at Run Your Business Like a Business. So, gosh, with that, I'm super excited to bring in Shahar Plinner, again, CEO of Formations Corporation.
Well, I'd like to welcome you, Shahar. Gosh, it's a pleasure to have you on my podcast, and I'm super appreciative to have you on because it's such a, always a valuable discussion. We've done a few webinars together, and to have you on my podcast is a real treat. So, welcome. And I thought we'd start off just asking you a little bit about Formations Corporation and how it got formed and kind of the history behind it, the inspiration behind it.
First, Nate, appreciate and thank you for having me on your platform again. It's just crazy for me to believe that it's already December, end of the year. And on the other end, it is just December. It feels like you and I knowing each other for years now, and 2020 it's kind of it's more than a traditional year. And Formations, actually it's an interesting concept that it's been into my brain for the last 4 years. I started thinking about how to make the journey of self-employed and navigate their world of complex tax and accounting, and how to make it easier, how to make it more approachable, how to make it more visible, how to allow self-employed to run business better, like how to make more money in the pocket, how to make smart decisions. And the tax system, allow you to have all of those beautiful things. And what Formations' idea was how we democratize it, how we bring it, from the world of corporation into the world of self-employed that really needs, to save and to have every money, each money or every dollar in their pocket.
Yeah. Well, I know, from doing all of our research over the last several years about running your business like a business, only 54% of the agents out there are actually paying their taxes on time. And we know probably 50% of the agents are not in the right corporate structure. And I know that, when I'm coaching people either one-on-one or in our mastermind groups, that the tax component of it, the expense tracking, just taxes in general. You just mentioned taxes. It's very stressful for people. It's like one of the biggest things that they, have fear or anxiety over. So, tell us a little bit just about how is formations different than, say, the traditional accountant? Because I know we have probably a lot of people who are using like the traditional one-off accountant, but how is formations different?
So, I've been seeing, I don't know, maybe 15,000 businesses in the last 15 years. And what I figure out is that, different people have different relationship with money and different relationship with their business and money. And being so close to the self-employed community from firsthand, and being a self-employed, being, an entrepreneur in the world of business, it was really my mission to help my people to navigate through these complexities. So I think what differentiates formations, beside the fact that we take really, everything in the tax code, everything available out there for business to be really efficient and successful, I think that we look from the eyes of the user. We are really looking from the eyes of the customer experience, the real estate agent. We lived their life. I've been an accountant, for the last 15 years. I've been, by myself. I also, grow my business, be, larger business, and I'm employing now, 50 people. So I went through this journey, and I've been in the shoes of the entrepreneur, the self-employed, the real estate agent, the independent contractor, trying to navigate the complexity. And by being there, I asked myself, how can I make that journey, fun? How we can make this journey not as painful? Why we're not using tax and accounting in a sexy way, like, sales and marketing? Why tax and accounting feels like a burden, while sales and marketing feels like, an ROI or something that can generate, revenue to the business? If you can actually use tax and accounting in a proper way, this is not just a cost center. This is definitely a revenue center. This is an area that if you run it correct, it saves you money. If you manage it correct or unmanage it by let someone else, taking it from you, you get your time back. And when you get your time back, I think, this is where, Nate, you and I really agreed on. This is where you shine, because, real estate agents haven't signed, for being bookkeepers or tax people. They've been signed, dealing with complicated real estate situation. So formations try to take as much of that work from you, giving you back the time that you so need in front of your customer, and increase overall your top revenue by allowing you to do more business.
Yeah. It's interesting because you and I are kind of on two different sides. On the coaching side, exactly what we're trying to do is help people, prioritize better, manage their time, their productivity, help them with the clarity of where it is they want to go with their business. And the idea of that, because people are so busy these days, is to open up space within their calendars and within their lives and even their businesses. And same is true with you, because so many people, and I found myself doing this over the years, in the past, where I would just come the end of the year and I'm all stressed out because I was thinking, do I have my receipts, and do I have, have I been keeping all track of my books? Are they update? Am I filing my taxes on time? And there's so much time that is spent just worrying about some of this stuff. And so, I really love what you've been able to do and to help streamline that for the real estate agent, take that worry, out of it. So now what I want to try to do is I just want to ask you a little bit about, now that we're at the end of the year, what should be the mindset of the agent as far as preparing for the end of the year here, and then also as we head into 2021? I mean, I think there's a lot of people probably want to forget about 2020.
Yep.
But what can we be doing right now to either save on our taxes or prepare ourselves for 2021?
So we'll talk a little bit later about 2021, because we also may do some tax regime changes, although I think that with the result of the election, we're kind of deemed to some status quo. So even though we have, a Democrat president, I'm not sure that he will be able to do easy, changes in the tax code. The Trump tax reform was really geared towards helping small businesses, and giving a lot of concessions and tax write-offs. So it'll be interesting to see how President-elect Biden, will maintain. But as for 2020, keep in mind that to make a great decision today, end of the year, December, you had to plant some seeds early on in January, February, March, all the way, so you'll have clean financials, clean numbers. Because at the end of the day, why do you want to make decisions before the end of the year if you don't need to make decisions? If your business is in a not a good shape, you didn't have a great, 2020, you may want to show some income, for some reasons of, lending, mortgages, retirement, things like that. But if your business did really great, and what we saw in 2020, that actually real estate agents shine in 2020. Real estate market in the areas that we, you and I operate, and mainly kind of in the West Coast, in Pacific Northwest, the market is really active. So planning for 2020 end of the year is a couple of things. One, make sure that your financials are in order as soon as possible. So what is your real number? How much is your top revenue at the moment? How much are your expenses are? And what is your bottom line? Maybe there's not a huge tax savings, so you don't need to rush over expenses. But the things that we really care for end of the year is what we say, what we call is kind of the business profit. We want to make sure that businesses that had a healthy year, fund retirement, set aside money for savings, make sure that they fund, health retirement plan, or some 401k, or know how much money they have, to do some expenses. You can expense today, before the end of the year. But expenses for us is not the number one thing that we go after, because expenses, it's money that you pay out, you'll never see back. So if you need to pay some marketing expense in January for ads in Google or Facebook or for some social media, yeah, you can prepay and buy some ads, in December to reduce your tax liability before the end of the year. But we want to make sure that the decisions that we're making before year ends are smart decisions based on numbers. And if we can fund, accounts that are still in my, under my umbrella, kids, retirement, health, this is the number one areas. And if we touch kids, I know that Nate, you and I had a discussion previously about, how we can use kids inside the household, an 18 years old kid that specializes in social media and help the family business, to be more efficient online, can be paid by the family business. So if something like that have not done, this is like a last minute do. You can still push a payroll, a payment to kids in the household before year ends, make sure that they have some earned income. And now when they have earned income, we love to contribute, into their Roth account or some other mechanism of retirement, because this is a great way, to increase overall the family wealth. So we want solutions that keep money in the family, not so much go and expense, and pay other people, unless you really have a huge tax liability. Again, this is one way to reduce it, but it's not my number one go-to.
Okay. And I had some questions around that as well, because, we're in December now. And so if I wanted to pay my son, who has been working for me, and I wanted to pay him, just say, you can pay him up to $12,000, even if it's just in the last month, right? You're not necessarily going to be questioned too much about that when it's paid, or is that a problem?
Again, keep in mind that your son is not like a regular employee that need to get paid every 2 weeks and going to sue you in labor and industry or employment security department because his dad delay his payment. So again, the fact that our kids are working for the business, there may need to document, that the kid is working with you, couple of hours every week. So if someone is working with you, 2-3 hours every week, and there's 50 weeks, and your boy basically spend 150 to 200 hours a year contributing to the family business, and at a reasonable wage, $20-25 an hour, you're getting into the $4,000-5,000 a year. The fact that you decided to pay one payment at the end of the year, I don't think it will make any problem in the system. Again, if you want to pay, you mentioned the $12,000. The $12,000 is the ceiling for standard deduction. This is, how much you can pay your kid without him picking up kind of the income as a taxable income. Again, as long as he's participating in larger scales a little bit, again, 300 hours, 400 hours, and he's getting paid, $30-40 an hour, just because, again, it's a marketing job. Again, it's a high qualified job. It's a job that you can easily pay someone else, $30-40, to do the job. Again, and now it's easily you get into the, 12,000, W-2 a year. I think it's the payment plus what do you do with the payment. Again, some of the pay can go to the kid, and I'm a huge fan about parking money for those teenagers in some retirement, building some wealth, for their future.
Now you still pay the 15.3%, right, on his wages as a company paying him let's say it was 10,000. Would I still be paying him the 15.3%?
So you pay basically what we call the FICA. You're paying both sides. Again, you're paying 7.65. He's paying 7.65. Again, you need to be 18 and older. Again, if he's the minor, there's also concessions about sometimes you don't need to pay the Social Security payment, so you can save also the 15.3%. But again, if you paid your kid $10,000 and you are in, the 35% or 30% tax rate, you saved $3,000 while you had to pick up, just a fraction of it, maybe half, a little bit less as a tax. So again, still makes sense. And the fact that you can take the money and invest, in a Roth IRA, the overall growth of the money is definitely, makes sense financially.
Yeah, one thing I did was I went to the Dave Ramsey calculator and I said, okay, well, what if I pay him 10,000 in a Roth and it goes in directly into his Roth IRA, it comes out to be like $600 and some $1,000 by the time he turns 65, I think it is. It's a pretty interesting number. That's just at like a 7 or 8% annualized return, which just, we always give that example of the compound effect. And,
exactly.
And so, and the magic penny, I love that for those of you who haven't heard the magic penny. So that's a great example.
And I think that what's important for us is just the continuation, So the limit for Roth IRA can be $6,000, but he's 18, until his first job after college, it can be 24, 25. We have 7 years that if you can contribute this constant, discipline about setting aside $6,000 for your kid for the next 7 years, $42,000, $50,000 with the growth in the next 7 years. Now do a $50,000 calculation from age 25 all the way to age 72. Yeah, as you said, I think it's above $1 million in tax-free money. This dude will love his dad, one day.
Oh, it's just amazing. I think that just that one idea was, worth listening to this podcast for sure. Tell me a little bit about one thing I was a little confused about too is just that, as an S corporation, which I know you're going to talk about here in a minute, the difference between and why people need to be in an S corporation if they're, making anything, say more than $40,000-50,000 a year. But anyway, I wanted to just ask you a little bit about when you talk about profits, because, we're paying ourselves a salary as an S corporation, right? And typically is that up to like 50% of your gross revenues, or what's considered like a reasonable salary to pay yourself based on, because you're paying the 15.3% on that salary, correct?
Yeah,
And then,
correct.
okay.
So there is a whole philosophy and discussion behind reasonable compensation. Reasonable compensation is what the IRS consider reasonably to pay you as the employee of the business, as the CEO of the business, as the title of employment, of the business, that will be reasonably, paid for Social Security and Medicare purposes, self-employment tax, FICA, So the formula for reasonable wage changed between different income level to geographic location to different industry. So reasonable compensation for 200,000 real estate agent in Kirkland would be a very different from, 200,000 insurance agent or a plumber or an electrician in the same area. So different verticals have different reasonable compensation. I can tell you for the last 15 years, I've been dealing also with resolution, which means I see IRS agents, in my office as part of the discussion. Again, keep the IRS as their partner to the game. So we're not trying to abuse the system. We're trying to use their tools, what they allow us to use in the most favorable way to the customer experience. So in a nutshell, you're right. It's anything between 40 to 50% of your net income should be converted to be a reasonable wage. So if an agent is making about $100,000, as a net income after expenses, and he will take about $50,000 in reasonable compensation, yes, about $50,000 not reasonable compensation can be net of self-employment taxes. This is where you can save the 15.3% of self-employment taxes on $50,000. This is north of $7,500 that he would have to pay if he would keep himself as sole proprietorship or single member LLC.
And this is the biggest difference, correct, between like an S corporation and just being a sole proprietor is your savings of that. And I just want to kind of stress that to our audience, correct, that you're paying yourself a reasonable wage. If you're an S corporation, you can pay yourself a reasonable wage based on your income, and you're paying the 15.3% on that. But what's over and above that is considered is it a distribution? And
Correct.
then you're still paying some tax on that, but it's you're not paying the 15.3% on that. Okay.
Correct. Yeah, you'll pay the regular federal and state taxes on everything. It's just the self-employment taxes will be limited only on half of your income. But I think this is just the gift, or this is just the gesture, of moving from a sole prop to or a single member LLC into an SCorp. Keep in mind that we see many people taking themselves from sole proprietorship into a single member LLC, and think that that's it, they're done. They did what they have to do. They completed their entity structure formation. And we want to make sure that this is really clear, that this is just half of the journey. If you're not filing the S election, converting your single member LLC into an SCorp, you will end up at the same tax structure as a sole prop, and you will tax yourself 100% on self-employment taxes. But as we said, the tax savings, this is not just why we're establishing SCorp. SCorp, it's an amazing enabler. It's an enabler to the world of corporate taxes. It's basically the corporate world. This bifurcation, the Nate out of the Nate Corp, creates some magic. Beside the fact that it's create this huge tax savings, it's now create a relationship between Nate and his corporation. It creates a branding perspective. I'm an employee of a corp. We see people that basically take this faith and move into the corporate world. We see their business shine because it's almost like the mental change, moving from a sole prop hobby business into a real business ownership. And when they own their business, they become this business owner and they get paid for it, a real W-2. There's some pride, there's some ownership that real estate get on their back, which actually make them an amazing producers. We see actually income coming in a higher rate because something changed mentally. And this is, in addition to the tax saving, which, why not to get $7, $8, $9, $10,000 every year into my bank account? It's like free sale of another closing. And as we said, it's the enabler. It's the enabler to retirement. It's the enabler to savings. It's the enabler for many other great things that we can describe on top of, again, these amazing tax savings.
Yeah. Yeah, it truly is that shift. And that's our company, Run Your Business Like a Business. It is that mind shift, going from just, hey, I sell, houses, sell real estate, to now I really own a business. I need to start thinking like a business. And when you do that, it's a totally different paradigm. And for those people who don't, aren't used to being entrepreneurs or having their own businesses, when they see those types of benefits, you're right. It's not only just the money in their pocket, it's that shift in their mentality, and the tools that it gives you to, kind of think on that next level. So I love that.
Yeah. And I think that, again, as you mentioned, there is a relationship between everything, between us, the business owner, between us as a business owner to the business, between the business to how much money we make. Again, most of us got into this self-employed, position to pursue dreams that, we create our own realities. There's no boundaries. There's nobody to tell us what to do. We can, we can pursue everything that we can, but there's always this concern about the financial aspect and the fact that I don't want to be penalized for that. And there is a way today, to pursue those two, aspects of both having in your dream job and making a lot of money and be really proud of it.
Yeah, no doubt. Gosh, I have so many things I want to ask you, but so I'm just going to go kind of in the order in my head. As far as your 401k or your SEP contribution, because you mentioned, you probably want to start thinking about, are you going to fund your retirement? There is a difference between, say, a 401k and a SEP, right? So 401ks, when do those contributions need to be put in?
So let me take a step back and I'm always referring into the world of corporation. Keep in mind that the tax world is geared toward corporation. If you're a corporate America, or if you're basically a W2 employee, there are solutions. There are defined solutions. There is a playbook how to run your income, expenses, deduction in the system. So by converting the sole prop into an SCorp, we basically mimic and democratize kind of these corporate maintenance into the world of self-employed. So I would ask you, you're dealing with, Microsoft W2 employees that coming and buy real estate from you, or Amazon employees and Facebook employees, and everybody coming with this very fat W2 would have a lot of numbers and dollar amounts. And on the W2, most of them have retirement plan. Show me one W2 employee that contributes into a SEP. No one. Why? Why corporate America decided that 401k is the best retirement plan for all of their employees? So Fortune 500 that employ probably 80%, of the wealthy, workforce is using 401k. And still sole proprietorships and self-employed are using SEP IRA. Why? It's from the same reason why sole prop are defaulting into sole prop, because it's easy, because it costs nothing to administrate, because you don't need to think about it, because it's the old paradigm about, hey, this is my grandpa did it. Oh, great. This is what my dad did, so it's great. This is what I need to do. No, look around and see what are the solutions. So this is kind of, more of the philosophical discussion. Tactical, it's because SEP IRA costs you more tax than 401k. So the 401k designed to be two parts. One part belongs to the employee. So you just need to have a salary. And this is why in an S corporation, we draw salary. One reason, because it gives you a good access into the 401k. And the second part is the profit sharing. The business can pay, a profit sharing, a match, to the employee, as part of the business contribution.
Okay.
In the world of tax, you need more money or more self-employment tax to fund SEP than to fund 401k. So 401k, in a nutshell, is just cheaper to operate. This is why it's more common, in the world of corporation. And this is what we try to do. We try to get everything that the best practices already figured out for the world of corporate America for the last whatever years, and bring it to the world of self-employed, as try to reimagine self-employed. Forget about what you know about how to operate, years ago. There is a new playbook. There is a new way of doing business, which is like, the other corporation. So if we cannot beat them, join them, Therefore, 401k, and again, we can show it in numbers, specifically, but 401k winning every time on the numbers and how much tax you need to pay compared to SEP IRA.
Now, can you convert a SEP IRA, or would you convert a SEP IRA into a 401k, or do you just start a whole new 401k and then keep your SEP where it is?
You start a whole new 401k, but once you are done with your business, you can always convert the 401k into what we call self-directed IRA. So what we would like to see with business owners, because we know that business owners will exit one day. And, you and I having a discussion about exit of businesses, because I truly believe that, real estate agents should have an exit strategy. Some of them basically let the business fade one day and say, you know what, I'll drive it to the ground until I cannot sell or don't want to sell more business, and that's it. But there's so much IP, and there's so much knowledge, and there's so much collateral that real estate agents build, So there is a transition. There is a way how to exit, successfully a real estate business. But when you decided to do that, this is where you close your 401k account of the business, and you can then convert it into what we call self-directed IRA. And now you can manage your own funds. You can buy real estate, you can buy stock, you can buy, businesses, and then improve, the overall IRA performance, and also get control, on what the investment characterization.
It's incredible how many tools there are and how much knowledge, really is needed around all of this. Just like as a real estate agent, we talk a lot about our knowledge of houses and our ability to really offer value. I mean, it's essentially the same thing that you're doing by, just having such great command of the tax code and these different tools, and seeing so many different businesses be able to take advantage of, the parameters, the laws, the rules that are around running a business. And so that's really, really amazing. So tell me a little bit about, for those people, those 50% of the people out there who may not be in an SCorp right now, what are the costs? Like, what's the how do I manage an S corporation as far as like the paperwork and the filings and all that? And I know that's what a lot of you do at formations, but what does that look like for a person who doesn't really know anything about SCorps?
So again, we are end of the year. So S corporation decision, in my opinion, drive by revenue, and not necessarily today's revenue, future revenue. Just because as a real estate agent, we have the sense about what's coming in front of us. We know that we built enough rapport with potential pipeline. So there's some things coming our way, and for sure, if we're a listing agent of selling properties, we know that properties are moving today. So if you are taking seriously yourself, and that you're going to generate the 50, 60, 70 and north of $100,000 a year in revenue, S corporation should definitely be a consideration. And then if you think about it, there is a set orders that you just need to do in order to make what we call SCorp compliant. Because at the end of the day, you're creating a legal structure that needs to be approved by state, by federal, and make sure that, again, that you just setting yourself for success by the law. So first step, you need to create a Washington State, what we call single member LLC. I'm the sole owners. I don't need to bring any ownership. I don't need to bring my kids. I don't need to bring my wife. I can be 100% sole owner of the single member LLC. State of Washington usually costs around $200. And then once I get the article of incorporation, I get my UBI number in the state of Washington. I'm going to the IRS website. I can file form SS form and get an EIN. This is the number that will identify me with the IRS. So again, UBI number identify me with the state of Washington. The EIN number is the one that identify me with the IRS, with the federal government. And if you work in any other state, California, Colorado, Arizona, again, there is a state registration and then a federal EIN. Once we get basically these two documents, we file Form 2553, again, another technical form, informational only. We ask the IRS their approval to convert my single member LLC into an SCorp. It's just a technical election. It's just asking a request to replace the form that I file with the IRS instead of Schedule C every year into Form 1120S.
Okay.
This is in a way the government, asking you to do something and set it one time. Then, because it's the new entity, now we want to connect the new entity, the short or the Nate Corp, into a business bank account. So we need a new, fresh business bank account, a business bank account that I identify with my EIN. I'm giving my agent or my brokerage, this EIN number with a form W-9, and make sure now that every sale that I'm doing, with my brokerage is going into my new business bank account. That's it, So now I have an entity, an SCorp. I have, a way to get income and revenue start, moving into my business bank account.
And then you're making, go ahead.
Yeah, I'm saying, and once the income hit my bank account, I'm start making revenue, this is where we suggest to put some accounting software, something that will monitor my income and expenses on a daily basis, and there are great solution. Formations is connected to Xero. Some people like to use QBO, QuickBooks Online. Some people use to, FreshBooks or some other mechanism. Again, then you need to define your reasonable wage. What is the ratio, as we spoke before, 50%, 40%, 60% of wage that I want to take? Once we design, and decided on our reasonable wage, we pick, a payroll software. QuickBooks can do it. Gusto can do it. Paychecks can do it. ADP can do it. There are many payroll providers. And once we do that and everything is set, and can be connected today automatically, this is where the business can start on a weekly, monthly basis, start reviewing the financials. End of the year, once everything is done, you have a P&L, income and expenses. You need to file a form 1120S. This is the SCorp tax return, and the byproduct of that form will be a K1, which will, report on your 1040, and a W2, which is the byproduct of the payroll that you run through the year. So there's a lot of noise, running through the business, and this is before even you report to the state, and this is before if you have some receipt to send if you are doing some activities outside the brokerage, and this is before managing credit card and maybe a part-time employee or a kid on the payroll. So you see that there is a lot of noise related to the back office activities.
And this is exactly what Formations is set up to do, correct? I mean, is to handle all this noise, to make sure that all the check boxes are checked on the things that you need to do to, really be running your business like a business in this SCorp corporate entity format. And that's exactly what you guys do, right?
Yeah. So again, in the Formations philosophy, we want to replace all of that noise with a dead silent on your side, and make sure that you're focused and clear about what your objectives, and your objective should be the front of the business, go and make tons of money.
Yeah, get those sales. I know this is one of the big areas that people stress a lot about is expenses. So what kind of recommendations do you have on managing expenses that you've seen that streamlined, easiest way to manage that and make sure that you're complying with the IRS rules?
It's an interesting discussion. Nate, you've been to the business, for many, many years. And, it's even a question I will refer back to you and say, hey, 20 years ago, when you start selling real estate, what was the cost to run a business? Probably pretty high. There was some hardcore cost that technology was not existing, and there is no shortcuts, and there is no platforms, and there is nobody, that can help you with an advice. So the notion is that business had to run, 30, 40%, of the cost of the revenue through expenses in order to keep, the business up in the air. Today, where everything is virtual, and we can do business from remote, and we don't really need, hardcore expenses for conferences and sales and marketing, and you can run a really lean business. So my challenge for real estate agents is show me the most amount of revenue that can generate and the least amount of expenses that you can run to generate that revenue. This is the goal. And then if you can achieve both, formations can help you to make money and to save tax, because you can make tons of money and you're not forced to live in the world of expenses. I need to buy another printer and another computer, and I need to prepay expenses, and I need to take another course, or maybe buy some continuous education before the end of the year, because I need to the fear of taxes. S-corporation solve for the tax problem. We can see top producers making $500,000 in revenue and not touching the 20% tax rate. Barely 20 point something. So if I'm making $500,000 net, out of my expenses, and I'm paying the government $100,000 in tax, and I keep myself $400,000 net, for me, for Shahar, this is a great deal. I'm going home every day happy without the need to overexpense, etc. So I think this is kind of what we spoke about, what we call it the profit first. Make sure that you first take your profit. First, you fund your retirement. You take money home. You pay the kids. You pay yourself. You do all of these activities, and then calculate how much the tax is. And if the tax is huge, there is other areas probably that you can continue to improve. And if you have to expense stuff, do it. But again, only what you have to, what you need to, not what you want. So again, needs versus wants. I know that you love this category. But again, there's a way to run a very efficient business today with very little expenses, high level of what we call gross margin profits.
I think those comments right there are just worth this podcast just in and of itself, honestly, because so many people are in that mindset, oh, I got to expense, and then, to make up, so I don't have to pay as much tax. But if they really keep their eye on the revenues and generating the revenues and not worry about what those expenses are so much, that we can find ways to pay less tax and essentially still put more money in your pocket and do everything you need to do financially to build wealth and create financial freedom for yourself. I mean, at the end of the day, that's what it's all about. At least for us, on my coaching side is, really helping people be able to retire, because I've seen so many people in this business that just, they don't have a clear path to financial freedom. That's really what drives us, apart from the system. So Shahar, anything else? I mean, I know we've been kind of coming up on 45 minutes here or so, close to an hour of time. Anything else you'd like to add to this discussion? I just want to thank you for being on and sharing with us all these great insights and pearls. But any last parting thoughts on end of year or beginning into 2021?
Nate, I'm a big fan of you. I'm a big fan of your show. I'm a big fan of your concept. I think that, again, the trust yourself, as the business owner, trust your business, the industry that you picked, and become a domain expertise and be good to your customers and be great for the industry and for your family. And at the end of the day, trust the system. There is a great system that allow people to make tons of money. So if you trust yourself and you believe in the business and you trust, the system, there are an amazing things that people can do. And I think that 2021 will be an amazing year. I cannot wait for 2021. I think that we are due with some high level of energy. Even during COVID, at least people know already what's in front of us. It's not as scary as before. We know that we can, that we are survivors and we can do great even when the economy is just going kind of a little bit kind of shaky and there is unknown. So I can't wait for this kind of cloudiness of uncertainty to be lifted, because then it will be just, an amazing, very successful year for self-employed and solopreneurs. And I think that, again, this is the time that we need to create this movement of self-employed and solopreneur. It's a huge segment of the economy, and raise hands and say, I don't want to be penalized anymore financially. I want to be free and I want to be rich. So, and I think we can achieve it both. So
I love that. Light at the end of the tunnel, and you're such a great inspiration. And again, thank you so much for being on today, Shahar. And yeah, folks, we will see you in the next time we're out. But I thank you so much again for your time, and we'll talk to you soon.